Good morning.
Good morning. How are you?
Good. How are you?
Good. We're trying to get Karen in. It keeps kicking her out.
I just see Children's Bureau. Maybe that was the wrong person. Hold on. I don't see, is it under Karen? Her Zoom account name?
Yeah, it would be under Karen.
She hasn't shown up in the waiting room for me.
No, she says here that it keeps kicking her out. It keeps telling her the meeting requires registration to join and is not supported to join from the browser. Please launch meeting if you have Zoom client installed. Otherwise, download Zoom. But it let her in when we did our pre-run.
Yeah. Did she register for the session?
She did.
And then she got the link.
For her.
And then she got the link to join.
Well, that's what I'm asking right now.
It would have been emailed to her.
Nothing like adding an 11th hour. Let's stress it out a little bit.
We'll get her in. That's why we're here early.
We like to keep everybody on their toes.
Right. Rob, how's your audio?
You're muted, Rod.
You're muted.
In many ways. How's that?
It's good.
Good. Good. Check 1, 2.
Check, check, check. I always wanted to be a rock star.
Now's your shot.
Exactly, right?
Kathy, you want me to give her a call real quick and walk her through maybe?
Yeah, I think that's probably a good idea. I'm also trying to find if I can find the day the link came to me, but if you call her, that might help her.
Can you give me do you know her phone number off the top of your head by chance?
Yeah, give me 1 second.
What if one of us just sent her the link, but she comes in with a different name? Would that work?
I tried that with mine and it blocked it. Because I'm like, I logged out and let her have my link if I needed to make sure, because she's the most important one. And it did not let me do that.
Can she try and download the Zoom app to her computer?
She's trying. That will be very difficult for her because of our IT.
Oh.
She is 310-709 6378. Oh, she got on with an iPad. So you should see Karen in your weight room now.
There she is.
So Kathy, you're most likely going to, hey, there she is.
With the iPad.
Kathy, you're most likely then going to control the slides.
Okay.
Because someone's going to have to share their screen, right?
Yeah.
Or can you share your screen, Kathy, with the PowerPoint?
I can. Yep.
Hi guys, I'm on.
How are you?
Hi there.
Good. It's the first time I've ever had it not let me in from my browser.
Weird.
Your audio's good. We can hear you good.
That's good.
That's the screen it wants.
So we decided to ask to stop for questions after slide 10, correct?
Let's see here. Yes. So I was going to confirm that with you. So I have, 'cause I had notes here. I think it moved to slide 12.
Yes,
Correct.
Is that the case?
yes, that's correct.
Okay. So yeah, you'll ask at slide 12 and then down at, there was another one here. And then just
Probably-
the
Probably after 15.
yeah.
Okay.
So 12, yeah, so you were going to ask questions at 12 and 15 is what I have notes on.
Okay.
Screen looks good.
Awesome.
You said 12 and 15 on the stops for questions.
Yes.
Yeah.
So
And that's
And
should
the
I
very
prompt,
end.
Oh,
should I
nice.
prompt that, or you're going to prompt that?
And then,
The questions. Should I just say, does anybody have any questions at that point, or?
yes, just go ahead
Okay.
and say at this point, are there any questions? And then Kevin, I'm going to be able to see, am I going to be able to see the chat box?
Yeah, you should be able to right now. I made you the co-host. Do you see the icon in the bottom? Should be like, sometimes it goes up top, but it should be like a toolbar on the bottom, and it'll show like participants, chat. Good morning. Yeah, Chris will just type in it.
So if you put your mouse down towards the bottom, Rod, the cursor it's like a disappearing cursor, a black bar.
Aha, there it is.
There you go. So yeah, you'll be able to see that, Rod, just fine.
Right on. I got it all teed up.
Cool.
And then a sequence of events again. We'll go through the housekeeping. And why don't we wait
Rod,
to
you'll take care of
record until we get through all of that?
It's already being recorded. I'll just chop it off. I can edit the video.
Okay, good.
Because this is all, I put it like that because I don't like to forget to record it. So I just
Right.
do it automatically.
Yeah.
And I'll just edit the video. It takes 5 minutes.
So we shouldn't say anything negative or bad about our bosses at this point in time?
This
Why?
would be the time to do it.
Well,
Everything you
except
say
Kathy. I
can
know
and will be
Kathy
used
will.
against you.
I say, Rod, when have I ever held back? Ever in the years you've known me?
Kathy, that's why you and I get along so well, honey.
Candor.
Jeez.
So is it, so I got a question. Is it too cheesy to put a virtual background on that is my business card?
No,
Whoa, wow.
busy, but no.
Yeah, there's a lot,
That's
but
different.
it's clean.
I say I can do the
I
same
mean-
thing. I've got SingerLewak if you want to see SingerLewak in the background. I figured you like the mountains and oceans.
I
Can
like
you
the
just do
mountains and the ocean. It's
Gallagher
a little peaceful.
without all the writing, Rod?
No, because it's just my
It's a
business
screenshot of
card.
it.
No, I'll go back
That's
there. I'll go back. There you go.
And then Rod, I have control over admitting everyone. So do you want to, so we can start at 9 on the dot, and I can just keep letting people in as we go, or we can wait till there's like, we have 54 registered or 55 registered. I doubt we'll have all 55 on here, but do we want to wait till we're like
Right.
close to that in the waiting room to admit everyone?
Yeah, I think, let's see how it looks at 9, and then
Cool.
if we got to dive in shortly thereafter, we'll gauge.
Easy. Just this light.
I did try to put a holiday shirt on. I got my red on.
I like it.
Very festive.
So if anybody happens to drop off due to audio connection, maybe we can just, step in for the speaker really quick and
Yes.
acknowledge that to the audience, and so there isn't like an uncomfortable silence for a very long time.
Yep.
So I've got to tell you, this is going to be a good topic.
I think so. Very much in demand, especially during budget season.
Who would have figured a hamburger discussion at Q's, Kathy, would have led to this?
Leave it to us to do our business meetings at a bar. So, I mean.
Wait, you guys are allowed to go to the bar?
Shh. This is being recorded.
Yeah, Karen, and even better, it's the same location that we used to go to after every Meet the Firms, like 25 years ago after our college recruiting events.
Wow.
That's gold.
Knowing most people who have accepted to go into a webinar, I'm guessing a lot of them are just dialing in at 9 o'clock.
Yeah. We're at 16 people right now in the waiting room.
Good deal.
And total
So-
registration was 35? Is that what I saw last?
55.
55.
But I guarantee you not all 55 will, not to be a pessimist, that's
Never.
just the nature of the culture these days with webinars. People go,
Right.
oh, you'll send it to me. And so I'd say realistically we'll probably have 40, 45.
Yeah, sometimes
take
I
that.
register.
25 would be good.
I was thinking that
Sometimes I
typically we
register
get
just to
about-
get the material.
Yeah, you get about 70%.
Yep. Let's say we wait till 9:01. It's 9 on the dot right now, Rod. Maybe wait till 9:01. We'll let them in, do some chatting, and then I can just be letting people in gradually. Right.
Yeah, I would just let them all in.
Let them all in right now.
I don't want them hanging up.
That's a good point. Here we go.
Got it. So
I do have control over the mute.
But
Are you able to see everyone, Rod? Popping in on the sidebar.
it's loading up.
Good deal. See some OneOC folks on here. Morning, team.
Morning. Thanks for putting this together.
Of course.
I want to know where Anna Marie is because that background is looking very relaxing.
I'm in the office, but that's in Hawaii.
Nice, nice. So let's see here. Kevin, what do you think?
Give it one more minute and then go ahead and kick us off. There's still a bunch of people jumping on.
Oh, good.
I see Juliana's name. Is that you, Juliana?
Yes, it's me.
Hi.
Hi.
How are you?
Hi, Juliana.
Hello. I miss you too.
I miss you too.
I know, I miss you.
I'm guessing we have to do these more often just so people can talk to each other.
Yeah.
Absolutely.
Okay, I think we are going to get this webinar started, and I want to welcome everyone from the nonprofit community to what we believe is a really important topic, and a lot of people, based on the struggles that we have all faced since COVID, and then now we have these loans that the government stepped up with, and then now how do we get it forgiven, or how do we pay it back, or what are the consequences in doing so? So we're very thrilled to have extremely bright, smart group here, and so in partnering with OneOC and SingerLewak, Gallagher is thrilled to put this on. So welcome everybody to the 10th of December, and so what I'd like to be able to do is go through some of the housekeeping, that just to make sure everybody's on the same page, that basically all the lines are going to be muted. The meeting is being recorded. If there's any audio feedback, please make sure the audio is turned off. There'll be an opportunity for questions twice throughout the meeting. So please go ahead and type those questions in the dialog box. There's going to be some information that SingerLewak, well, the two partners, Karen and Kathy, are going to be going through. Again, this is very complicated information, yet they are going to simplify it. So don't hesitate to ask any questions throughout. We're going to compile those questions, and those answers will come either during those question answer period, or we will answer them as a follow-up following the presentation. So please make sure you type your questions in the chat box, and we will we'll make sure that we get all the questions answered. So on the agenda today, you're going to see we're going to do basic introductions, and then we're going to have some overviews, and then we're going to get into the meat and potatoes, as I would call it, to the presentation, and then again some Q&A. And we're going to hopefully get through this presentation in relatively quick fashion, so to leave as much time as possible at the end for you to get as many, so we can get as many of those questions answered for you. So what I'd like to do is give a little presentation and overview of who Gallagher is and why we have partnered with OneOC, the importance that we feel OneOC brings to the community and the nonprofit world. Just a little short overview, and that is Gallagher has been around since, we were founded almost over 90 years ago. But in the nonprofit community, we have over 24,000 nonprofits globally that we represent and work with on the benefits, risk management, and a lot of the questions and blocking and tackling as it relates to companies and their risk that they face in the benefits. The other part of that in the nonprofit community is we have dedicated on an annual basis over 100,000. Last year alone in 2019, we did 112,000 community hours. Our employees that are out in the community dedicating their time to those community efforts that they have passion for. We're not guided to do any one. It's what do we want to do? How do we want to give back our time, our efforts, our knowledge? So we're very familiar with the nonprofit community. And one of the biggest pieces on the area that we truly value is our Ethisphere Award, which is basically it comes down to ethics. And we're awarded this 9 years in a row. And we're the only firm like ours, small, medium, or large globally, to ever receive this award, not only just once, but 9 years in a row. And a lot of it does come down to our social responsibility. So now I'd like to turn it over to Kevin, and Kevin is our partner, and he oversees OneOC's partnerships. And so Kevin, please take it away.
Good morning, everyone. It's nice to see some familiar faces and some new faces as well. Just wanted to share a quick overview of OneOC and who we are as an organization. I won't be walking you through this very beautiful circular graph here, but as you can see, OneOC does a lot of different things, but at our core, our mission is to really accelerate nonprofit success. And as an organization, we're committed to helping our nonprofits in Orange County be as efficient and as effective as they are about their missions. We are a management services organization, and so we provide different support and services to both nonprofits and companies, which you can see on the service solutions pathway on the screen. We really are unique in that we exist in connecting the nonprofit sector and the business sector together. For most of you on this call, most likely are from the nonprofit sector, and just wanted to give you, a quick overview of some of the ways that we do help our nonprofits accelerate their success. One of those is similar to what you're doing right now. We offer our training program where we offer hundreds of different affordable trainings, workshops, and certificates every year to help just build skill and competency for nonprofit professionals. We do offer coaching and consulting around board development, organizational planning. We offer back office support services. We actually have a good amount of our team on our back office support on this call to manage your accounting and HR services to help you be able to focus more efficiently on your mission. And we do a lot, and our lifeblood and kind of the origin of our organization really is around volunteer recruitment and volunteer services. And our volunteer services help connect businesses and employees and valuable service opportunities to make an impact in the local lives of nonprofits through different events. And one of the primary ones we're actually focusing on right now is through our season of giving. And so if you're a nonprofit on this call and you are looking for volunteers and you're looking for volunteers to help you with projects, I'll actually drop a link in the chat for you guys to learn more about that. But we're just excited for you guys to be here today. And OneOC really during this time, during COVID-19, is just doing our best to provide as much support and resources as we can to help you guys grow and serve your mission. So if you have any questions or need support in any area in your nonprofit, feel free to reach out, and my email will be in the chat. So thanks for being here.
Right on, Kevin. Thank you so much. And as Kevin said, this is a partnership, and as much as OneOC is involved in the community and making sure everybody is stronger, has more knowledge, that's one of the reasons that Gallagher has partnered in this opportunity it's basically to share knowledge and bring resources to the nonprofit community that can assist you. And in doing so, in this particular presentation, we brought a very special group, an accounting and audit firm, SingerLewak. They're a regional group that, we're very proud to partner with because they have a deep understanding of the nonprofit community. They have a number of clients and they assist in the community in a lot of ways. We're very lucky to have two individuals, both partners with the firm. One is Kathy Lawson. She's a CPA and has more than 15 years experience in the accounting field. She has performed audits, reviews, compilations, and a number of due diligence engagements. One of her primary focuses is the nonprofit community. And yeah.
I think we just had some feedback. You can keep going, Rod.
Okay, very good. And then the main presenter today is also a partner, and she's the lead for SingerLewak's nonprofit group. And Karen, she comes with over 21 years of experience in working in nonprofit organizations, including auditor, consultant. She's been a CFO, board member, and volunteer. She currently is the chair of a nonprofit CPA group called Cal CPA, and she's also on the advisory board for the Valley Nonprofit Resources Group. She's on the board of directors for C5 Youth Foundation of Southern California and YWCA of Greater Los Angeles, and she's the chair of the audit committee of C5. So as you can see, we're thrilled to have SingerLewak and their team and their lead team involved, and hopefully everybody's able to come away better educated, more knowledgeable. And so without further delay, I'm going to turn it over to Karen. Karen, take it away.
Thank you, Rod. Appreciate it. So it's great to meet everyone, and I'm so glad you could be here on this very sunny Thursday. One other thing that I do as a part of my career is I sit on the nonprofit expert panel for the AICPA. So part of what we were tasked with was the accounting for the PPP loans. So I put this slide on here mainly to kind of give you some insight on where to find resources. So if you're having any difficulty in the loan forgiveness process, the Small Business Administration has put together a really good Q&A to talk about different things that you might have questions about. Every question that my clients have had, I've gone to the website and kind of looked at what their Q&A is, and it's kind of helped guide me into the loan forgiveness process. So, slide. Okay, so basically back in, I think it was May. So once the PPP loans all came out, it became clear for business entities that there was no guidance in US GAAP. So in the contribution standard that not-for-profit entities use, it explicitly scopes out business entities. So we were tasked as part of our group with AICPA, we were tasked with kind of writing up, on the nonprofit and for-profit side, here's how you account for it. So we ended up with 2 basic models for not-for-profit organizations, and business entities actually ended up with 4 models. So it's been a little bit easier on the not-for-profit side. Slide. So one of the first things that you should do when you're trying to understand how to account for this is really just look at what's the definition of a contribution. So a lot of people think of it as, I'm getting cash or other assets and I don't have to give anything in return, but it's also a settlement or cancellation of liabilities as well. So you can actually account for this under the contribution model. So slide. So what I've done here is kind of given different fact patterns and your possible accounting for it under each fact pattern. So if you find that you didn't qualify for the loan to begin with, which I have not seen this come up yet, you would basically call it debt, right? So you basically are planning to pay it back. So it goes on the books as debt. If you expect partial forgiveness, then you have an option of using the debt model or the contribution model. And if you expect full forgiveness, then you can either do the debt model or the contribution model. And the debt model is going to be kind of your fail-safe. So how you account for it after it's forgiven is identical, but just kind of looking at are you sure it's going to be forgiven or not? I have probably 3/4 of my clients have gone the contribution model, but I have a few where they're a little bit concerned about the forgiveness they're going to get, so they've gone the debt model. Next slide, please. So then you've got when the recognition occurs. So 958605 is basically the contribution model, and then ASC 470 is debt. So how the or I guess at what point in time the debt turns into a contribution or the grant advance turns into contribution, meaning revenue is different. So so for contribution, you're looking at when the conditions have been substantially met. So now that ASU 2018-08 has been adopted by all the nonprofits, we have to look at the conditions that need to be met, right? So we both basically have a barrier as well as a right of return. So your barrier is that you have to have qualifying expenses. You needed to actually qualify it in the beginning and then have maintained your full-time employees, as long as you don't, if you can take the safe harbor, great. So that's kind of the condition that you have. And then of course the right of return is that you have to pay it back if you don't meet those conditions. So so that's kind of what you're looking at on the conditional contribution side of it. For the loan, then you're looking at that gets basically considered a contribution once the you've been legally released from it. So you basically receive word from the bank that yes, your loan has been forgiven. And then the timing and pattern of the recognition. So when the grant is awarded, if conditional, it'll be immediately kind of put on, once the condition is met. So we kind of just talked about that. And then the presentation of it will be, you're showing it on, they're both liabilities. But if you go the grant model, you're going to kind of call it a refundable grant advance. If it's a loan, of course, you're just going to put it on as, note payable, debt, whatever your normal naming convention is. So next slide, please. So are there any questions at this point?
Right now, there are no questions in the box.
Okay. So things you want to ask when you're considering which model to pick is, did you qualify for the loan? For loans that are over 2 million, we kind of heard a while back that there were going to be automatic audits for those. We haven't heard anything else after that. So, just kind of looking at, will this be really looked at hard by the bank if it's over 2 million? Will the accounting for it as debt affect your debt covenants? So looking at it in that regard. And if you've had a forgivable loan, like we've got clients who have HUD forgivable loans, and so they basically have treated those as contributions in the past. So they've made that policy election. So you kind of want to stay consistent with whatever your policy has been over the years. So if in the past you've treated forgivable loans as contributions, then you'll want to keep that as a consistent treatment. Okay, next. Okay, so then the accounting for it. So once you record the initial receipt of it, I mean, that's pretty easy. The debits and credits, cash and debt. And then you're going to impute interest on a monthly basis. And so one thing to point out here is normally when you have a below market rate loan, meaning that it's only 1% versus what your normal incremental borrowing rate would be, then you'd have to impute the difference between those two. But since this is a rate that has been established by a government agency, you're not required to do that. And I've included the standard there, just in case your auditor or accountant is not aware of the standard. That kind of lets you know that I can leave it at 1%. I don't have to impute it. So next. Okay, and so then let's say 4 months later it gets relieved, and so you're basically your normal accounting for it, if it wasn't going to be a contribution, would be you write off the debt, write off the accrued interest, and then you've got a gain on extinguishment. But for nonprofits, you're going to have a contribution as opposed to a gain on extinguishment of debt. So next. Okay, so this is the accounting treatment if it's a contribution. So you basically would record it as cash, and then it would be going on as a liability for a refundable grant advance. And so then, of course, you're calling it conditional. So anytime you get any type of grant and you're saying it's conditional and you get the cash up front, you're kind of putting it on as a liability for a refundable grant advance. So it's the same type treatment there. Next, please. So, oh, actually, can you go back? Sorry. So one thing to point out here, you notice that I didn't put any accrued interest on here. So if the loan is fully forgiven, then they forgive the interest as well as the loan. So you don't have to pay that. So that's one of the things I wanted to point out there. Next, please. Okay, so are there any questions at this point?
Not yet.
Okay.
Is there anyone out there? Does anybody have any questions so far? Because I know there's a lot of information. So go ahead, please type in the chat box. And if you want to wait till the end, that's fine as well. But don't hesitate to type in. And if there's something critical and I see it, I'll interrupt Karen. But go ahead, Karen.
Okay. So I want to
hold on. One came in.
Yeah.
Hold on.
Okay.
A couple came in.
Okay.
What if one of the questions is what if the loan is partially forgiven?
So if it's partially forgiven, so if you're looking at your balance sheet date, so let's say we have clients that were 630 year ends, and we were kind of looking at if partial or not partial. You can use either just debt, or you can what they call bifurcating it and make one portion of it debt and one portion of it grant advance. It just depends on what message you want to send to your financial statement reader. Most of my clients who have been a little concerned about whether it's going to be fully forgiven have just shown it completely as debt.
Okay. And then there's another one. Since we don't know if it will be forgiven, what should we do with the interest entry?
So you'll just keep accruing it. So you'll accrue the interest and then expense it on the other side.
Okay. The nonprofit, okay, got it. Let's see, are the interests partially forgiven?
Yeah, so you only have to pay interest on the portion of it that's not forgiven. So yes. So if 95% was forgiven, you have to pay interest on that other 5%. Great.
That's it now.
Okay, great.
Keep the questions coming though.
So for auditors, this is a conversation I've been having with my clients that have been a little confusing for them. So there's a concept here when you are accounting for the loan as you pay it down, you incur your qualifying expenses. Your treatment for that should be identical to, like, let's say you have a government funding or you have a donor grant, and you're kind of accounting for the costs related to that grant, like kind of segregating them so that if the auditor asks you, can I get all the backup detail for the loan forgiveness, you're able to supply almost to the GL detail or a very good spreadsheet that kind of shows here's the cost that I incurred, because we're going to need to audit that. And even though this is government funding, it does not fall under the single audit. So there is no requirement to have a compliance audit, but we are still required to look at it in regards to your compliance with federal laws and regulations. So depending on how material your loan is, we'll be looking at things like, did you qualify for it? If it's still on your balance sheet at year end, if it's been fully forgiven, then we're just going to look at, could anything go wrong after the fact, right? So we're going to be making sure also that you did not double dip. So what that means is that you use the qualifying expenses for the loan forgiveness, and then also told either a grantor or the government that those expenses were part of their funding to you as well. So those will be things to look at and make sure that when we audit it, we're going to be specifically looking for that type stuff. I'm in the process right now. I got assigned this task for the AICPA, the audit risk alert. So that's one of the things that we're putting in there for auditors, is just to make sure that they're looking at that double dipping concept. I think that one's been confusing, and most of the information that has come out has been in the form of, you can't double dip with government funds, but that's just because both are government funds, but still the concept of double dipping as it relates to even private donor funds or corporations, foundations, it's still the same concept. So when you do your financial statements, one of the things that you're going to be required to include in there in your disclosures as far as the terms of the loan, how the entity determined it was qualified for the loan, and then what accounting method that was used for the loan presented in the financial statement. So I've included a few examples of disclosures that were put out by the AICPA. And if you want to go to the next slide. So here's an example of a loan. It's pretty detailed, as you could see. So it's really just kind of, covering how they determined that they qualified for it, what the eligibility requirements, and then they kind of ended up with, kind of saying that, that they're going to, any unforgiven portion of it is payable of over 2 to 5 years, and that they intend to use the proceeds for its use and apply for forgiveness within 10 months. So that's they're kind of saying, well, we're treating it as debt for this purpose, but however, we do expect it to be fully forgiven. Okay, next. Okay, and then here's one where the forgiveness income is not recognized. It's just a little bit shorter disclosure, and then we have one where the income has been recognized. So it's kind of, talking about what it did. So next, please. Okay, then we've got a contribution. So the contribution revenue was not recognized. So they're basically just kind of talking about, how they recorded it, how they determined that they met the eligibility requirements, and also the fact that they plan on getting it, partially forgiven as well. Next. So this will be when the contribution revenue is recognized. So you're gonna just it's really kind of disclosing, how it was treated, so that the reader understands what it is, and you can include it in your government funding on your line item of your income statement, and then just kind of disclose it as being included in that area, or separate it out, just depending on what message that you want to send to your financial statement users, because of course, this will be something that's not regular and ongoing. So it may be important to kind of break out as a separate line item if it's really material to your income statement. Okay, are there any other questions?
We got a couple. I got a doozy for you.
Okay.
The question is, our CPA told us to not expense any interest or recognize any assumed forgiveness in the prior fiscal year, May to June 2020, and to include the full revenue expense in the current year, July 2020 to July 2021. Is that incorrect?
So I guess my follow-up with that would be, are you going under the debt model or under the contribution model? So was it shown as a loan or shown as a grant advance? Because if it's shown as a loan, then you would need to keep accruing it, and the only other side of that entry would be expense. If you're showing it as a contribution, then there's no requirement to impute the interest.
Great. And what I would, let's see, unless we get a response to that, I will make certain that we get that question over to you and Kathy.
Okay.
So that
they said it was shown as a loan.
As a loan.
Okay.
Yeah, then I would definitely impute it. For most of our clients, it hasn't been really material at this point. A lot of them got the loan in like late April, so May, June. It's not really going to be a lot of not anything that's going to change or misstate anything. So I don't think that would be a big issue.
So there's another one that says, we received the loan in May and we're treating it as a grant. Our fiscal year end is 6/30/2020, and the unused part of the loan as of 6/30/2020, we put it in deferred income account. We're in the mid of our annual audit, and we haven't been able to apply for the forgiveness yet. The auditor wants to treat it as debt. Can we argue that we expect the entire loan forgiven?
Yes, so I would point them, so the very first slide that we had, I included the TQA that the AICPA released. So if you point them to that TQA, perhaps they haven't seen it yet. That kind of gives a little bit of guidance on the different models that nonprofits can use.
Great. Thank you. And then, do you have any advice for those nonprofits that received both the PPP loan and the EIDL loan? How does that affect reporting purposes?
Well, your EIDL loan, of course, will be covered under government auditing standards. So if it takes you, one of the things that you want to take a look at is if it takes you over that $750,000 mark, you may be required to have a single audit. So I'm not real familiar with the EIDL loan. I haven't had any clients who have actually gotten it. So I think that I would probably go to the Small Business Administration website and take a look at what the requirements are there. But if you produce a
Great.
CFA, just make sure that you put it on the CFA so that you don't get a finding for not including it.
Any other questions? I guess everybody got everything answered and they got everything that they needed. I would say, well, I think then what I'd like to do is wrap this up. And I want to thank everybody for participating. Everybody who joined us on the call. I hope you got something out of this. I hope there was some clarification made. It's complicated. I have a little more clarity. I will not say that I am knowledgeable, but I have more clarity. So I want to thank both Kathy and Karen for SingerLewak's expertise in bringing that to the table. Their contact details will be in the slides that we send out, along with Kevin's at OneOC. The contact details will be there as well, because as you know, OneOC is a go-to resource for the nonprofit community, and which we value as well. And just as a reminder, Gallagher is just thrilled to partner with the nonprofit community, OneOC and Singer. We help organizations, small, medium, and large. Just sometimes it's a conversation, sometimes it's rolling up our sleeves. So don't hesitate. If you have any questions on what we can do and how we can help, please reach out. All of our contact details will be on the slides. This has been recorded. And so everybody who signed up, you'll be getting this very soon. I want to wish everybody a very happy holiday season. Please be safe. There's a lot of unique issues going on out there right now, health, otherwise. So please be safe, enjoy your family, enjoy your friends, and take some time to reflect, and let's see what we can do for the community going forward. Thank you, everybody.